Hello guys, welcome back to my YouTube channel. It's your girl Ako Yvette in the building. In today's video guys, we are going to be looking at the central bank. Alright, do you even know what a central bank is? Okay, so let's look at what a central bank is. In every country, the central bank is a bank usually owned by the government, and it is the head of the country's banking system. Every country or group of countries within the same geographical area have its own central bank. And unlike the commercial banks, it never has branches outside its home country or group of countries. In England, the central bank is called the Bank of England. In the United States, it is known as the Federal Reserve System. In Ghana, it is called the Bank of Ghana. In Nigeria, it is the Central Bank of Nigeria, and in Cameroon, it is the Bank of Central African States, which is a central bank for some Central African countries falling within the Equatorial Africa and Cameroon Currency Union. The countries are Gabon, Central African Republic, Chad, Congo, Equatorial Guinea, and Cameroon. Okay, it performs the following functions. Now the central bank performs the following functions. One, it is the government's bank because it keeps the government accounts, settles the government debt on behalf of the government, and lends to the government through the treasury. The central bank, secondly, that's the first point. Now let's go to the second point. Secondly, the central bank is the sole bank authorized to issue banknotes. That is, it is the bank with the authority to issue new notes that come into circulation through the commercial banks. Now let's get to the third point. The central bank is described as the banker's bank in that it makes periodical lending to commercial banks just as commercial banks lend to their customer. Also, it keeps account for all the commercial banks to help in settling interbank indebtedness and to also enable the commercial banks have the opportunity to borrow from the central bank. Let's get to the next point. It acts as the lender of last resort. What does this mean, guys, when they say it acts as a lender of last resort? What does this mean? This means that it is willing to lend for some certain important project when commercial banks are unwilling to do so. Furthermore, when a commercial bank is entirely short of money and cannot raise money from anywhere, the central bank lends it money. The central bank does this to avoid bank crisis, which can affect a country's economy. The next point, it is responsible for international monetary negotiations on behalf of the government. For example, it can negotiate for a loan from the World Bank, the International Monetary Fund, or from the African Development Bank on behalf of the government. This is another function it performs for the government to deserve being called the government bank. It controls the use of foreign reserves. That's the next point, guys. It controls the use of foreign reserves of the country by limiting the amount of foreign currency to be exchanged for home currency to avoid balance of payment problems. This is also a function performed for the government. Now, guys, let's look at the third point. The next point and the last point. It controls the supply of money in the economy. All right, so that's the function of the central bank. All right, so the central bank has a lot of function. Okay, the central bank has a lot of functions which we just named here. We also talked about how these central banks are being called in the United States, how it's being called in Ghana, how it's being called in Nigeria. So in United States, it is known as the Federal Reserve System. In Ghana, it is called the Bank of Ghana. In Nigeria, it is called the Central Bank of Nigeria. And in Cameroon, it is the Bank of Central African States. All right. So now, guys, let's look at how the central bank controls the supply of money. That is, we are talking about the instrument of monetary policy. Okay, what instrument of monetary policy does the central bank use to control the commercial bank? All right, so we are looking at how the central bank controls the supply of money. Now, the central bank controls the supply of money in circulation to ensure that too much money is not pumped into the economy to chase too few goods. Okay, this control is effected in the following ways. So this is how they control money. They control it through by open market operation, what we usually call OMO, which is known as, it's an abbreviation, we call it OMO, it's an abbreviation, and it is called open market operation. It controls it secondly through the special deposit system. Also, it controls it through the minimum lending rate system, and it controls it through the lending policy directives method. Now, let's look at OMO, how it control it through OMO, that is the open market operation. This involves the buying and selling of securities. When there is too much money in the circulation, the central bank sells securities, thus calling on interested members of the public to buy shares or stocks in the central bank, thereby collecting away large sums of money from the public to reduce the money in circulation. That is how the central bank controls money through the open market operation. So what happens is that when there is too much money in circulation, the central bank now sells securities, okay, or stocks in the central bank. They take the security, they take the securities and sell them. So what do? This is done by calling on interested members of the public to buy shares in the central bank, thereby collecting away. So when this happens like that, they sell, when they sell the securities. Now, what happens is that when they sell these securities, interested members come in and then give them large sum of money. Okay, give them large sum of money. By doing so, they control the money, or reduce the money that is in the society. Now, the second point is by special deposit. What does this mean? This is also called cash reserve or cash deposit system of controlling the supply of money. The central bank has the right, as the head of the banking system, to ask the commercial bank to keep a certain amount of money in their deposit account with the central bank. So they can ask the commercial bank to keep a certain amount of money with the central bank, okay, because they are the head of the banking system. The central bank is the head of the banking system, so it has the right to tell the commercial bank to keep a certain amount of money with them, and this process is what we call this special deposit system. Okay, now this amount cannot be withdrawn at will, except the central bank wants to encourage the commercial bank to expand the granting of loans to the public. This system of controlling money supply is called the special deposit system. So when they deposit this money with the central bank, now the commercial bank cannot just get up at a point and then go and withdraw that money. It's not possible unless there is a problem and the central bank wants to encourage the commercial bank in order to expand the granting of loans to the public. That is when now they will give them this money. Now we have the third point, which is the minimum lending rate system. This involves setting a minimum interest rate on all loans to the public. That is, it instructs the commercial bank not to give loans below a certain rate of interest. If the minimum lending rate is increased, the demand for money reduces. Of course, if you are going to the bank to take a loan and you see that the interest rate is high, you will not want to take that loan again, because at the end of the day, you're going to pay so much amount of money as interest. So in that case, it's going to reduce the taking of loans. Okay, it's going to reduce it. Okay, if, like they said here, they say if the minimum lending rate is increased, the demand for money reduces. On the other hand, if the money in circulation is too small, lending to unemployment, or when there is depression, the minimum lending rate may be reduced to increase the demand for loans to encourage investment. Now we got the third point here, lending policy directives method. The central bank may give directives to the commercial bank to restrict the lending of money for all purposes in the economy. Now, this directives is called quantitative directives. It could also request that the commercial bank are selective in the granting of loans by restricting loans for personal consumption. In this case, the commercial bank would grant loans for certain purpose but restrict loans for other purpose. This directive is then called qualitative directive, not quantitative. What do we mean here? What they simply mean is that at a particular point in time, they can decide that, okay, since there's too much money in the society, if you're coming to take a loan because you want to buy maybe foodstuffs, like you're just taking it for personal consumption, it's going to be restricted. So at a point in time, they will just decide to give loans, maybe to people that want to do business, maybe to people that want to pay school fees, maybe to people that want to pay debt. If it's for personal consumption, like maybe you want to buy foodstuffs and so on and so forth, at a point in time, the central bank will restrict the commercial bank from doing so. Okay, so that is it, guys, about the central bank. If you have any question, state it at the comment section. All right, state it at the comment section. Thank you guys so much for coming through, for watching this video. Please don't forget to hit that subscribe button, down below, because we have a lot of interesting videos coming up. We are going to see in the next video, we are going to be looking at commercial banks. We are going to be looking at the functions of commercial banks and so on and so forth. All right, so please don't forget to hit that subscribe button down below, state a comment at the comment section, and please don't forget to share my videos, guys. Share my videos out to as many people as possible. All right, so thank you guys so much for watching, and please do have a blessed day. Thank you.